Welcome in this video. When is Xcn coin pump coming? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful examination of the chart reveals a distinct falling trend structure, which stands out as one of the most critical technical hurdles for the market at the moment. Such falling trend lines indicate that in the past, price has consistently made lower highs, and every bullish attempt has been met with selling pressure. However, this is only a reflection of past price behavior. In terms of technical analysis, this structure indicates that once the trend line is broken, a fresh start can be made and a strong buying momentum can kick in, ending the current pressure. Therefore, a break of this downtrend is considered an extremely positive and promising development for investors. Breaking trend lines is often interpreted as a turn signal in technical analysis. Breaking downtrends in particular indicates that the long-standing selling pressure in the market is over and that buyers are taking control. In this context, a break of the downtrend on the current chart could herald not only a short-term upside bounce, but also a larger and sustainable uptrend. This paints a very promising picture for investors. The potential moves that can occur when falling trend lines are broken are usually sharp and voluminous. This is because investors who have been below the trend lines start to show renewed interest in the market after the break. At this point, buy orders increase, short positions are closed, and bullish trades are initiated. This cascading effect causes the price to move rapidly upwards. If this downtrend has been tested and halted many times before, a much stronger reaction can be expected if it breaks. This is considered a break of significant resistance in technical analysis and usually means the start of a new bullish wave. A break of an existing downtrend is also a serious breaking point in terms of investor psychology, because trend lines represent not only the direction of price movement, but also the mood of the market. During a downtrend, traders are cautious, often selling or staying away from the market. But when the trend breaks, this psychology starts to change. Insecurity gives way to anticipation, and caution gives way to optimism. This transformation is reflected in price movements, and the uptrends become more permanent with a trend break. Trend lines can also combine with important technical structures. For example, the upper boundaries of a bull pattern, an inverse shoulder-head-shoulder pattern, or a pennant sometimes overlap with these falling trend lines. In such a scenario, when both the pattern and the trend line break at the same point, it opens the door for a much bigger and more decisive upward move. Therefore, a breakout of the current downtrend is not only a standalone development, but also a very strong and meaningful reversal signal when considered in combination with other technical formations. In addition, the retest after a trend break is also extremely important for technical analysis. If the price breaks the falling trend line and then returns to it and continues to rise with support, this indicates that the trend break is valid and solid. This type of retest also provides an opportunity for traders looking to take new positions. This is because a retest indicates that the market now recognizes the trend line as support, not resistance. This is one of the strongest technical signs that the uptrend can continue steadily. Breaking the downtrend also allows the price to break through the resistance areas in front of it. This is because many traders consider downtrends as dynamic resistances in technical analysis. A break of this line suggests that there are no more significant technical obstacles in front of the price and the way is clear. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. A close look at the chart reveals a very striking and promising technical pattern for traders: the inverse shoulder-head-shoulder pattern. The formation of this pattern is considered one of the most reliable in technical analysis, signaling that a downtrend is about to end and give way to an uptrend. Currently, the price is building the right shoulder, the final phase of this powerful pattern. This could be a critical and exciting turning point for traders, because with the completion of the right shoulder, the Tobo pattern becomes technically active, and when this structure is completed, there is usually significant upside price action. The inverse shoulder-head-shoulder pattern generally consists of three main parts: the first shoulder, which is formed by the initial decline and subsequent reaction move; the head, which represents the last major selling wave in the market by forming a deeper bottom; and the right shoulder, which is formed by the subsequent second rise. For this pattern to be completed, the price needs to break the horizontal resistance level called the neckline to the upside. In the currently observed pattern, the price is stabilizing in the right shoulder area, indicating that the move towards the neckline is now quite close. Tobo patterns are considered highly reliable among traders because they represent critical moments when the market psychologically signals a turnaround. At the first shoulder, the market is still bearish. At the head, the selling reaches its peak. And here, many traders feel that the selling pressure is nearing its end. The right shoulder is often seen as the exit point. The selling pressure has now faded, and buyers are gaining more and more strength. This means that bullish expectations in the market are increasing and prices are preparing to move up. Analyzing the Tobo structure on the current chart, it is clear that the price is stabilizing in the right shoulder area. This is usually an area where investors take positions, selling pressure in the market weakens and buying interest starts to increase. The balanced and stable formation of the right shoulder increases the validity of the pattern. Although this pattern may have some volatility in the short term, it forms an extremely strong technical foundation that supports buying trends in general. When the breakout of the reverse shoulder-head-shoulder pattern occurs, the target in technical analysis is usually determined by the upward projection of the distance between the bottom of the head and the neckline. This means that with the breakout of the Tobo pattern, the price has the potential to rise by this distance. Therefore, if the pattern observed in the current situation is completed, it is highly likely that the price will start a significant bullish move. Achieving this goal usually happens within a strong and healthy trend structure, rather than with sudden and drastic movements. This gives traders confidence and shows that the uptrend can continue steadily. For the pattern to work properly, it is extremely important to observe an increase in volume at the time of the breakout. Volume is one of the most important technical indicators of traders' interest and confidence in the market. If the neckline breaks to the upside on strong volume, this reinforces the validity of the pattern and confirms that the upward price movement will continue. Volume-supported breakouts usually mark the beginning of strong and lasting price movements. Therefore, an increase in volume on the breakout that comes with the completion of the Tobo pattern is one of the strongest signs that prices may move towards the target. The formation of Tobo patterns is also a technical reflection of the transformation in investor psychology. There is still indecision at the first shoulder, fear peaks at the head, but with the right shoulder, confidence in the market starts to return. This psychological transformation is clearly reflected in price behavior. By the end of the right shoulder, the market has made a decision. The decline is over and the rise has begun. RSI, one of the indicators that traders carefully follow in technical analysis, provides valuable information to understand the current market strength and momentum. In particular, trend structures observed on the RSI are considered as leading signals of possible directional changes on the price chart. The uptrend structure that is currently forming on the RSI chart presents a promising picture for investors. This uptrend shows that the market's internal dynamics are moving in a positive direction, and that buying pressure is gaining more strength over time. When rising trend lines are observed on oscillators such as the RSI, it is usually a sign of a strong and sustainable uptrend. When the RSI turns upward at an angle and a trend line forms to support this trend, it indicates that buyers are gaining weight in the market, and prices are forming higher and higher lows and building an upward structure. Such structures, especially when considered in conjunction with the price chart, reveal a correspondence between both the price and the indicator, which is extremely positive for analysis. We should pay attention to RSI trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.